Welcome back. Now let's listen in on some of your top picks. We start with cash. Tell us why cash.
Look, in a market where there's a lot of uncertainty, it doesn't hurt to have flexibility. We right now in our portfolios are sort of barbelled. We do have some energy and defense contractors, which we think are well suited to the kind of environment that we're in. On the other side, because there's real risk of a hard landing and because they are behaving really constructively, we have a pretty big overweight in utilities and consumer staples for defense. But the third piece is cash, and cash gives us the flexibility to deploy as it makes sense. It gives us protection in the event that the market continues to fall. If we do take out these June lows in the S&P, we could see another 10% lower. We don't know what's coming next. So in the meantime, if you have cash, you have flexibility in the future. And I think it's always important to be willing to recognize we're in a different kind of environment, and we are right now. We need to make sure that we're not going to get caught fully invested in a declining market.
Okay. Your next one has seen shares under pressure for some time now. This is New York Stock Exchange listed Northrop Grumman. Where do you stand on the business?
Yeah, actually, Northrop Grumman is doing really, really well. It's from a relative strength perspective, in the last year, it's traded better than 95% of companies in the S&P. Now, structurally, we know that sadly with the conflict going on in Ukraine, there is a growing global demand for replacement and adding of different defense systems. Northrop Grumman is a really diversified business. They one of two manufacturers of nuclear subs, which are going to be important with what's going on in the Taiwan Strait. They have big contracts to build hypersonic cruise missiles and ground-based missile defense systems. They're the leader in drone technology. There's been lots of success with that in this conflict. They're the subcontractor on the F-35. They're the lead contractor on the B-21 bomber. So it will be nothing but increased defense budgets going forward. Yeah. And the stock continues to hang in really, really well versus the market. I think it's a timely position.
Okay, great. So some runway for growth there. The next one is a biotech name. We've seen the stock steadily gaining over the past year. Vertex Pharmaceuticals. Tell us, why do you like this one?
Yeah, look, first of all, the biotech sector came under pressure when unprofitable tech rolled over in February of 2021. So now that's 18 months ago. As we've gone through the bottoming in June of this year in the market, biotech found a footing and has held well above those lows while the market has been selling off. So biotech as a group is outperforming, partly because it's just not economically sensitive. And there's lots of great technologies that are coming to market. Vertex is the leading producer of a cystic fibrosis treatment that continues to proliferate around global healthcare systems. It's head and shoulders above what was available previously. It's defensive because the earnings are non-cyclical, and they're growing at 25% a year. Companies trading at 18 times next year's earnings. So it's really well insulated from a weaker economic environment and pretty predictable.
Are there any other businesses in this space that you like?
Well, look, there are a few, but I think that I would stick with something very large cap. This is at a $74 billion market valuation, and is one that has just recently made a new 5-year high, which is technically often a very significant thing because it means that all of the shareholders are happy.
Okay, and any other sectors, just looking at a quick scan of North American markets right now, obviously you have given us so much advice about how to be cautious in these uncertain times. Are there any growth opportunities that you think you didn't get a chance to cover on today's show?
Yeah, look, we have been quite bullish on alternative energy and utilities that are in alternative energy. So companies like Nextera, which used to be known as Florida Latent Power, but they're about the biggest in wind power and in solar in the U.S. And with EVs, really gaining presence, the utilities are going to have pretty solid demand. Florida is growing very, very quickly, so it's a great market for them. I think that when we look at companies like that, companies like Northland Power who have a lot of assets in Europe
Right.
in wind. This is, I think, a very interesting place because structurally we do believe there's a shortage of carbon-based energy, and that likely over time these things are going to do pretty well, especially because they've got nice growing dividends and they're very little economic sensitivity. So these are the types of things I would focus on, things that are a little bit more predictable right now. And if you miss the bottom here, it's not a big deal.
Right.
It will be really important to see when things rally,
yes,
what rallies, and then when the first pullback comes, what holds up and what gives it back. The things that hold up the best, that was real buying. Those are the groups you want to focus in and let things unfold.